It's Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my daily comment for Friday, December 11th. Now, I've been discussing the commodity currencies recently with one big exception, the South African rand. That's because even though the South African economy is definitely dependent on commodities, its commodity mix is different than other countries, and the behavior of the South African rand is different than that of other commodity currencies. So today, I'd like to discuss the rand and its outlook. I looked into the correlation of dollar-rand with a wide variety of commodities, as well as with stock markets and interest rate spreads. What I found was, 1, the strongest correlation is clearly with stock markets, especially the MSCI Emerging Market Stock Market Index, but also the S&P 500. As such, it appears that the South African rand is a typical growth-sensitive emerging market currency. Secondly, it's more sensitive to movements in industrial metals than to movement in precious metals, even though South Africa is most prominent as a producer of the latter. That agrees with the idea that it's being traded as an emerging market currency and not trading directly against its export basket. Third, the difference between official interest rates in the US and South Africa is of little use in determining the exchange rate. In fact, the 2-year spread actually works in reverse. That is, the rand tends to weaken against the dollar when the spread's the widest. That suggests more that the spread is driven by the FX rate rather than the FX rate being influenced by the spread. I also take a look at how the correlation of the rand agrees with or compares with those factors of the Australian dollar. In short, it's nearly the same. The big difference between the two currencies, and indeed between the rand and the other commodity currencies I've been talking about, is probably twofold. 1, oil prices aren't as important for the rand as for the others because South Africa doesn't produce much oil. Secondly, South Africa is a typical emerging market country, meaning it's one where politics is important as economics for how markets behave. That's why I'd like to avoid the rand right now. Low tax revenues and falling employment in the mining sector are likely to increase political instability. So even though the rand offers relatively high interest rates, I wouldn't recommend carry trades using it at the moment. Get more market insights on our educational pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.